Morning folks, welcome to today's video. I said I would do a natural gas update very late on Sunday when the market opened, but I didn't. We gapped down a little bit. There wasn't much to report on, so I didn't do a new video, but this is where we are at the moment. We were long, if you remember. You can see some of our entry positions down here. And on the rollover on the Sunday, we gapped down just a little bit, but below the trend line, below the 20 period moving average here on the 4-hour chart. We did hold the 200 period moving average for a while. We've now just bounced down below it. We actually closed that long position on the move down. But what we've got here is a tweezer bottom with these two candles holding up quite well. Although we are below the 200 on the 4-hour, it does look like we're trying to bottom here. Now, it's all very iffy. And really, I don't know which way this market's going to go, to be honest, but we're long for now. And I've put a very tight stop loss just below this double bottom low over here on the 4-hour chart. And that's at about 353. I'm not going to stop and reverse, but I will probably hedge this trade if we drop down. So I've got a 4-cent risk. We've taken about almost $1 on this trade on the upward trend. So we've now got a 4-cent risk on this trade. Let's have a look at the day chart to see where we could get to. If you remember, I had various paths, some moving down, some moving up, including this green path. But we made a double top there on the daily chart with two spike highs. And we've now broken down through that trend line that you saw on the 4-hour chart. I was hoping we could reach up to the underside of this trend line over here, but we did not do that and we've just fallen down. Now remember, we are long. We are holding the 50-day moving average and the 20 and the 100, but the 200's way below us, and that presents a future target for any moves down. That's roughly in line with this longer term trend line and at around about 2.85. So we've still got three very clearly defined support levels below us, and we've got some very clearly defined targets above us. The support levels are $3, as always. A big round number, a most frequently traded zone. If I put a volume profile here on the right-hand side, which I'm not going to do, you'll notice that the $3 level is pretty key. A lot of activity around there. And I've drawn a black line there to illustrate the previous highs and lows, swing highs and lows all around the $3 level. Given enough time, actually, and if this meanders along and dribbles down slowly, the 200 period moving average and this rising trend line will meet with $3 in about a month's time from now, towards around about the 20th of March. So that would be really interesting, and by then we will have gone through the rollover. Let me draw a squiggle on here for you, something like this, maybe something like that, into that apex of the corner, the $3 level. And also there's a Fibonacci level there too. Well, it's not a Fibonacci level, it's the 50% retracement level. So that's a potential path. Now bear in mind, we are actually long and hoping to hold above this current support level. Before we go back to the 4-hour chart, let's go to the day chart here on the Henry Hub. So here's a NYMEX chart for the Henry Hub, bearing in mind that the rollover is coming up very, very soon. That's the 26th of February, we're now the 18th of February, and my broker will probably roll over towards the end of this week. So I'm very unlikely to gain anything from this trade in the next few days if we do sort of dribble down like I showed you on the other chart. And hence I've got a pretty small position and a tiny stop or hedge level just below us. So this is where we are on the Henry Hub. So it looks like we're trying to get up, but basically just into these resistance levels. We've got a big conglomeration of confluence of various resistance up above us, including the Fibonacci retracement level. Looks something like this. You can see we reached up to the 618, made a double tweezer top, potential tweezer top up there, gap down and moving down a little bit, just holding the 50 and the 20 period moving averages. As I said, don't be mistaken that this is in a bearish trend. It may reverse to bearish, but the trend is still definitely upwards. We've got higher highs and higher lows. In fact, you can see that on the weekly chart even better. So a steady progression upwards, big rejection a couple of weeks ago, as you know. But since then, we've recovered pretty well in almost like a V-shaped sort of recovery, bouncing off the 20-week moving average. Let's go back to the day chart. So that's where we are, precariously perched at 358, the price we got long at on this last sort of reversal, with a very tight stop loss, as I explained earlier. And the targets for the upside are back into these levels, particularly the underside of this rising trend line. This is the most interesting line for me. And if we take some time to get there, very much like I showed you on the other chart, we could sort of squiggle up there and then turn around. Sorry about the bad drawing again. And that would take us right back up to this previous swing high and recent sort of significant high at about $4.4. So it's either that, and that's the path we're betting on currently, possibly incorrectly, or the other path that I showed you on the Black Bull chart, the broker that we're trading at. That's that path there that I showed you here on the Black Bull chart, which we discussed earlier. This is the day chart. Let's have a look at the 4-hour chart, and I'll show you why we went long, simply because of that little tweezer bottom there. But any break below there or close below there, we'll be hedging this or getting out of this trade. So not really very much to go for here, and with the rollover coming up, well, late this week in my case and for my broker, and early next week with the Henry Hub at the NYMEX, there's not a lot going for this. We may just drift around and dribble around until the rollover occurs, as often happens. So there are a number of reasons to be bullish, a number of reasons to be bearish, as I've shown you on all these various charts, and no real gain to be had here, no sort of serious upside, particularly at this price level, which is pretty expensive for natural gas. I'd rather be buying much lower down into the $3, $2.85 or $2.50 level. A cursory glance at the COT report, for instance, shows that we're still well above seasonal average. Injection season's coming up, but managed money adding much more to the long side and still 210 long, only 136 short, adding less to the short side. Non-commercials, on the other hand, which are also hedge funds and so on, institutions, roughly balanced, but adding a little bit more to the short side, starting off with a bit more to the short side too. Swap dealers going long, therefore expecting the market to go short, and other reportables, that's people like you and me, 28,000 long, 183,000 short, and adding stacks more to the short side. Very often, one wants to go in the opposite direction to the retail traders and go with the managed money, which is long. However, there is a chance that we'll pop back up to this previous swing high, first of all at 3.8, and then all the way back up here at about 4.3. That'll take us into the apex of this rising triangle, the underside of that line, the top side of that line, and somewhere up into here, if it goes up. Bearing in mind we are below the short-term trend line already. And back to the day chart, that's kind of what it looks like. There are entry positions, our original positions, and we've finally just gone long again over here with a very tight stop loss, just about 4 cents. Well, I hope you found that useful. I'll see you in the next video. If you did like this, please like and subscribe. Support the channel with your great enthusiasm. I'll see you in the next video. Take care.
Energy in every space. Nat gas kings of fortunes rise, watching numbers with keen eyes. Profit margins, no disguise, to the top where dreams surprise. Screens are flashing, move in sync. On the brink, we barely blink. Up the charts, our funds increase. Trading gas, we find our peace. Every trade